If your credit score is between 580 and 620, a door that's been locked for 30 years just opened in November. The 620 mortgage floor is gone. For 30 years, 620 was the wall. If your score was under it, you could not get a conventional mortgage. That wall just came down. Did you know Fannie Mae quietly changed this rule in November of 2025? Did you know most loan officers still tell people the 620 rule applies? 620 removed. November 2025. Fannie Mae stripped the floor out of Desktop Underwriter, the automated system that approves most mortgages in America. The change was buried in a selling guide update. Nobody made it a headline. By the end of this video, you will know exactly what changed, who it helps, who it does not, and the 3 moves that get you approved under the new rules. And by the way, there is a trap built into this change that could still get you denied. I will show you that in a minute. November 2025, April 2026. 1 selling guide update, 1 FHFA announcement. By minute 4, you will know whether the bank on your corner has actually updated to the new rules or is still pretending the old wall is in place. First, what actually changed. In November of 2025, Fannie Mae issued a selling guide update. The update removed the 620 minimum representative credit score from Desktop Underwriter. That is the automated system that approves the majority of conventional mortgages in this country. Before the change, if your representative score was under 620, Desktop Underwriter would not even consider your application. It would kick the file out. Loan denied, no second look. After the change, the score is one factor, not a gate. The automated system now evaluates the full file: income, reserves, debt-to-income ratio, payment history. The score still matters, but it is no longer the wall. I will explain the new approval logic in a minute. But first, you need to know why this happened now. Quick reset for anyone just jumping in. Fannie Mae removed the 620 minimum credit score from Desktop Underwriter in November of 2025. The FHFA approved 2 new scoring models in April of 2026. Buyers who were locked out under the old system may now have a path. But there is a trap. Now, here is what it is. Here is why November 2025 mattered. 5 months later, on April 22nd of 2026, the Federal Housing Finance Agency and the Department of Housing and Urban Development made a joint announcement. Fannie Mae, Freddie Mac, and the Federal Housing Administration would all accept 2 new credit scoring models: FICO 10T and VantageScore 4.0. Those new models are different. They use trended data. They count on-time rent payments. They give more weight to recent payment behavior. They are designed to capture borrowers who would have looked thin or risky under the old classic FICO model. Translation: borrowers who were locked out under the old model may now look approvable under the new one. That is why Fannie removed the floor first. The new scoring models needed room to do their job. A hard 620 cutoff would have wasted the whole point of the change. So who actually benefits from the floor removal? 3 groups. First, thin file buyers. People with limited credit history but solid rent and utility payment records. Under the new VantageScore 4.0, on-time rent counts. Under FICO 10T, trended payment behavior counts. Second, buyers recovering from a setback, a medical bill collection, a divorce, a job loss that dropped a score from 700 to 605, but is now resolved. The old floor would have rejected them automatically. The new system reads the full story. Third, self-employed buyers, borrowers with strong income but a few late payments from a rough year. The old model treated late payments as flat negatives. The new models weigh recent behavior more heavily. 12 months of clean payments now does more lifting than it used to. If you are in any of those 3 groups, the door that was locked in October just opened in November. Now here is the trap I mentioned, because this is where most people will still get denied. The trap lender overlays. Fannie Mae sets the federal rules. Individual lenders set their own rules on top of those rules. Those extra rules are called overlays, and nothing stops a lender from keeping its own 620 floor even after Fannie removed theirs. In fact, Many lenders will keep their overlays in place for at least the rest of 2026. They want to see how the new scoring models perform in real-world loans before they expose themselves to lower-score borrowers, which means the rule changed at the federal level. But the bank on your corner may not have changed yet, so you can be a perfectly qualified buyer under the new federal rules and still get denied by the first lender you call because their internal overlay has not been updated. Here's how you beat the overlay. 3 moves in order. Each one costs you nothing but time. Move 1. Ask every lender about overlays in writing. When you call a lender, do not just ask, "Do you approve scores under 620?" Ask specifically, "Do you follow the November 2025 Fannie Mae Selling Guide update? Do you use FICO 10T or VantageScore 4.0? Do you have any lender overlays on minimum credit score?" Get the answer in writing or email. If they cannot give you a straight answer, move to the next lender. Move 2. Target lenders in the FHFA limited rollout. When FHFA announced the new scoring models in April, they did not turn it on for everyone at once. They launched a limited rollout with approved lenders. Those lenders have already updated their systems. They are using VantageScore 4.0 today. Some are using FICO 10T already. Ask any lender you call this question. Are you a participating lender in the FHFA VantageScore 4.0 rollout? If the answer is yes, you are talking to a bank that has already done the work. They will have fewer overlays, faster approvals, and a clearer read of your file. Watch this part carefully. Move 3. Use a mortgage broker, not just a retail bank. A retail bank has one set of overlays. A mortgage broker has access to dozens of lenders, each with its own overlays. If your file does not fit lender A, the broker can shop it to lender B. Then lender C. The broker is paid to find the lender whose overlays do not block your file. A retail bank is not. Brokers cost the same as retail in most cases, sometimes less. Their value in a transition year like 2026 is that they know which lenders have actually updated their underwriting and which ones are still pretending the old rules apply. Before I show you the 4 moves to position yourself under the new rules, you need to hear the lender overlay trap that still gets people denied even after the rule change. Quick favor. If you had no idea Fannie Mae removed the 620 floor in November, hit that like button and drop a comment below. I read every single comment and reply personally. Share this with family and friends who are trying to buy a home, and don't forget to subscribe. We put out several new videos every week. Drop a comment. What is your current credit score? I want to see how many of you are sitting in that 580 to 620 zone. Okay? Here is the action plan. If you are sitting between 580 and 620. 4 steps. In order. Each one buys you a better rate at closing. Step 1. Pull all 3 credit reports today. Go to annualcreditreport.com. Pull Equifax, Experian, and TransUnion. They are free. Read every line. Look for collections under $500. Look for paid medical collections. Look for accounts that should not be there. Each of those is a potential dispute. A single dispute that wins can move your score 20 to 40 points in 30 days. Pay attention to this. Step 2. Get every on-time rent payment on the record. Under VantageScore 4.0, on-time rent counts. Under FICO 10T, it is part of the trended data. Sign up for a rent reporting service, Experian Boost, Rent Track, Isusu. Get the last 12 to 24 months of rent payments reported to all 3 bureaus. If your rent is on time and not reported, you are leaving free score points on the table. This is the single fastest way to move a thin file into approval territory under the new models. Most channels miss this. Step 3. Pay down revolving credit to under 30% utilization. Credit card balances are the lever you can move fastest. Get every revolving account under 30% of its limit. Under 10% is even better. Both old and new scoring models reward this. The drop in utilization shows up on your next statement cycle, usually within 30 to 45 days. Under 10% utilization. 12 months of clean rent. That is 2 free moves before you ever talk to a lender. Here is where it gets real. Step 4. Get pre-approved with 3 lenders, not 1. In a transition year, shop the rule, not just the rate. Get pre-approved with 3 lenders. 1 retail bank, 1 credit union, 1 mortgage broker. Compare not just the rate, but the overlay rules each one applies. The cheapest rate on paper means nothing if their overlay denies your file at underwriting. Let me bring it all together. Fannie Mae removed the 620 mortgage floor in November of 2025. The FHFA approved new scoring models in April of 2026. Buyers who were locked out under the old classic FICO system may now have a path under FICO 10T and VantageScore 4.0, but individual lenders can still apply their own overlays. The federal door opened. The bank-by-bank door is opening slowly. Ask every lender about overlays in writing. Target lenders in the FHFA rollout. Use a broker if you need overlay flexibility. Get rent on the record. Pay down utilization. Pre-approve with 3 lenders. This is the part that matters. Here is what to do this week. Pull your 3 credit reports. Sign up for a rent reporting service. Pay down 1 credit card to under 10%. Call 3 lenders and ask about overlays. 2 hours of work this week could save you a mortgage denial in 3 months. One last thing before you click off. The April 22nd mortgage scoring change is the other half of this same story. I cover that in detail in the next video. But the rent reporting move I want you to make today is the fastest score lift available before any lender call. If this video helped you, please give it a like and leave me a comment with your thoughts or questions. I read every comment and reply personally. Send this to family or friends who are trying to buy. And make sure you subscribe, because we put out several new videos a week, all free. And the next video you should watch is the April 22nd, 2026 mortgage scoring change. The full breakdown of FICO 10T versus VantageScore 4.0 and which one helps you more. Make sure to subscribe so you don't miss it. It will be uploaded within the next 2 days. See you there.